this is Alex, Chief Strategic Officer at ECLUBTRADING Limited. Thank you so much for joining us tonight. Thank you so much for joining us on Instagram as well. Please have a look at our disclaimer. You can find it at the bottom of our YouTube page. Or as you know by now, you can go straight to our website, eclubtrading.com. You can find all the info there about what we do, the services that we provide, and the community that we are looking to grow in time. So we had a very, very difficult day in the markets. I hope everyone is doing all right. I hope you had some sell stops. I hope you followed some of our recommendations. I hope you stay tactical. Maybe you tried some trades versus a level, versus a 15, 30, 1 hour low. If they didn't work out, I hope you got out of the way and managed to protect as much capital as possible. Do bear in mind that even us, that we have together more than 30 years of experience in the markets, we had a big down day in our portfolio. We were long a couple of names. We were long some call options for the earnings season in the FANG type names, and it's been a really difficult day. We tried some stuff, some worked well, some didn't. All in all, a poor performance. As you can see, this is the S&P, the SPICE, huge gap down, and then we've been on sale throughout the day. We put in a low at 432.94. The only positive news for the SPICE is it is a higher low compared to the 428.86 from the previous week. So this is a higher low. What does it mean? It means that maybe we had this happening before last year as well. Also here, back in May, when we put in a higher low and then we started higher from here. So this was similar, a double bottom below the 50-day. Here the same, a double bottom and another higher low above the 100-day. So we will see how it goes from here, but all in all, definitely not the day to put a lot of money into play. You could have tried to buy versus some levels. If it didn't work out, I hope you got out of the way and managed to protect as much capital as possible. There's a lot of talk on the street about the debt ceiling. The Democrats and the Republicans are not agreeing on this. We know that the US is not going to default. They're going to find a solution, a compromise. Either the infrastructure bill is going to be smaller and then they're going to accept the debt ceiling increase and so on. The main issue for the tech sector right now and for the market, which is dependent on the tech sector, is the treasury yield, which continues to be above 1.5%. And there are a lot of analysts on the street that predict an increase to 1.7, 1.8%, which would make tech and growth names very unattractive at the current level. So this is the main debate. This is the main reason why we are selling. This is the main reason why we had such a poor performance in the Qs, which is the tech sector we're going to go over now compared to the SPICE. But all in all, do keep in mind that if you're a long-term investor, maybe this is the moment where you put some money to work. This is the moment where you try and buy some stocks for your portfolio if you're a long-term investor. If you're a short-term investor, definitely not the time to push short, because this is a huge candle down. We just stopped at the 100-day, so we need to see 1 more 2 days how we're going to end this quarter. We have another 2 days of this quarter's bit of rebalancing for the end of the quarter, and then we have the new monthly inflows on Friday. So you don't want to be caught short after a huge downtrend. If we take out this bounce that we had here, it's a big downtrend all the way from 454 to 430, so it is a big drop in the SPICE as well. So not the best time to be short, not the best time to be long. You have to be tactical. If you're a day trader, you can do more trades throughout the day. We see how we open tomorrow. If we open lower and then we manage to reclaim this 432.94, maybe some selling pressure is relieved and we can march higher from here. If we open higher but we cannot manage to take half of this candle out, then it might be a good short opportunity if we are higher. What did we do? To position, we have mostly cash. We don't have any stocks long except for Ford and Uber, which are still acting well. And we put on some long dated calls in some of our favorite names such as Apple, Amazon, Google, Facebook, AMD and Nvidia. So this is what we did. These are just some long-term dated calls in case we have a bounce of these lows, when we're going to create some spreads. If you buy options, you know your risk from before. It's not like you're going long 100 shares of Apple or 100 shares of Nvidia and tomorrow you are down 5-6% on that, which could hurt your portfolio a lot. So let's look at the Qs. Really poor performance in the Qs. We went below. I talked about on Twitter and on our website. If you go to our website, you have the our updates section, where you can find all our tweets and how we see the market and what trades we do throughout the day. This was an important level. First of all, this 365, 364 level, we went below it. And then this was the battleground between the bears and the bulls, 360.93. This was the low from last week. We pushed below 359.35 is your new point of reference. We see how we open tomorrow. We're just above the 100-day. If we do open below it and we manage to reclaim it, it might be a nice reversal for this sector. If we open above it but we cannot reclaim 363, 364, then it might be a better short than a long here. All in all, if we do break below the 100-day, the next big support level is around 350, and then the 200-day all the way down to 338. So keep that in mind. We're just down about 6% from the highs in the Qs, and if a true correction starts from here, at least 10% down from 382, that means 40 points. So around 340 would be a possible bounce if we continue lower from here. I don't believe this. I tend to see the glass half full. We've seen how resilient this market is. We've seen these types of bounces after a big down day, and then another drop down, and then the next leg higher starts. We have some catalysts on in the near future. We have the new monthly inflows on Friday. We have the end of this quarter, and we have the earnings for the big FANG type names, which should be great. So it's not the time to be overly short. It's not the time to be over long. It's time to be tactical, and this is what we have been preaching throughout this year, throughout the month that we have started the club trading. It's a very narrow market. It's a very difficult market. It's an adult swim only market. So you have to be ready. You have to know your levels. You have to know what you're committed to and why you're committed to those names. The IWMs, the small caps, this is where money hit yesterday. Today they have been for sale as well. I talked in the morning game plan about the IWMs holding above 225. They opened just around here, and then a huge candle down. They negated all of yesterday's action below the 21 day and 50 days in no man's land, all the way down to 220.85. So the IWMs were no longer the place to hide your money in, as this sector has been for sale as well, and this is a great gauge for investors' risk appetite. So definitely a lot of oomph has been taken out of the market, as we have seen from the IWM. Similarly, if you look at the VIX, I always like to look at the VIX in the morning and to see how it trades throughout the day. We opened, I believe, the VIX around 21, 22. Any level above 20 means that there is a big scare in the market, and we reached a high of 25, 26. So definitely it has been a tricky day, and investors are rather on the defensive than on the offense here. But as you all know, like Warren Buffett likes to say, be greedy when others are fearful. So if you are a long-term investor, I do suggest you put some money to work, maybe in some longer-term options, or if you want some SPYs or some Qs, similarly option plays for the end of this year. Apple continues to be for sale. It shows some relative strength throughout the day, but then it made a new low, 141.69, just above last week's low of 141.27. So all in all, it's still kept above this low. We'll see how it goes. If this is a double bottom and from here we can start a pre-earnings rally, we shall see. It's just below the 100-day. The next big support level, 137.75, and below it the 200-day, 133.76. We have added today to Apple's long-term call options that we have for next March. Next up is Amazon, very similar to Apple. Made a new low here compared to last week, 32.90, but closed above this 33.05. It gave you a nice day trade if you want to bounce, if you wanted to play a bounce of the 200-day. Usually when stocks first meet the 200-day, they have a bounce. This is exactly what happened with Amazon. So if you bought Amazon around 30-90, you had a nice bounce of 30-40 points if you focused on these stocks throughout the day. All in all, again, all this move has been negated. So Amazon not looking great here either, below the 821 50-day, 100-day, just above the 200-day. So all in all, Amazon looking weak as well. Despite some announcements of new products today, investors didn't care much about Amazon's presentation today. Tesla, one of the few bright spots out there, still a stock that is trading above the 8 and 21 day, and like I said it many times on this channel and on our Instagram page. When a stock is above the 8 and 21 day, you have to be committed to it. You can buy the dip in it, and today it was a nice red to green trade, even though this candle doesn't look like it has been green throughout the day. Actually, we bought Tesla in pre-market around 780. It gave us a really nice rate all the way to 795. We exit around 790, and on the dip, for example, Maria bought it again around 770, and she exit around 785. So it gave you lots of opportunities throughout the day. And what did I do at the end? I put on some call spreads for this Friday. I bought the 780s, and I also bought the 800s for mid-October, because Tesla is looking really well, and as long as it holds this 765 level, Tesla is still in play. Google, very, very similar to Apple and Amazon, made a new low here, 27 of 7. But remember, Google is best in breed. It's the best acting FANG stock out there, and you don't see Google many times below its 50-day. So let's see the last time it happened if we take this one out. The last time it happened, here it defended it. So the last time Google was below its 50-day, you have to go all the way back to 6th of January. And even then, it closed above it. So let's see, a candle actually below, it's here. So 28th of October last year. So if tech is to rebound, Google definitely in place. So what did we do today? If you remember, we put on a call spread for the earnings. We bought the 28.50s and we sold the 29.50s. So today on weakness, we closed the 29.50s and we are naked the 28.50s. In case Google has a pre-earnings run, in case Google manages to reclaim this 27.26 and reclaim its 50-day around 27.50, we're going to create a spread in case it has a pre-earnings run. Ford, we continue to hold Ford. I talked in the morning game plan about Ford. It announced 3 new plants for its EV production. It's investing a lot of money in this new sector. It promised to make, I believe, about 70 or 80% of its cars electrical by 2030. Investors applauded their decision late last night in after hours. It went as high as 1490. Today, obviously, it went down with the market, but it was a good buying opportunity. So we bought some more Ford, and now we have a full tier position for Ford, which is looking constructive, as you can see, again, above all the moving averages, definitely a bit extended, so you have to be prepared to buy Ford also lower. We are willing to give Ford the benefit of the doubt and stay in this name to 1350, let's say. And the other stock that we still have in our portfolio is Uber. Uber continues to act well, despite the market weakness. Definitely dropped a bit today, but it's still about 45. 45 will be our stop loss for Google. This has been a great swing trade all the way from 42 to 47. We have been trimming along the way, and today we bought actually a bit more Uber. So guys, stay tactical, know your levels, know what you're committed to and why you're committed to, and if you're a long-term investor, maybe with the 6% correction in the tech sector, maybe it's time to put some money to work in this sector. But be very careful, know your levels, know what you can lose, and if you want to know exactly what you can lose, I do suggest, if you can trade options, buy some long dated options or some shorter term options in case of a bounce. We will see how we open tomorrow, and depending on the open, if we open lower, but we have seen a lot of misdirection recently, and I wouldn't be surprised to have a gap up tomorrow. This is why we put on some options. But if we do open lower, look for today's lows if they are reclaimed, and if they are reclaimed, you can play a bounce of that. Better opportunities are definitely ahead. The US is not going to default. We're going to get past this. The rate is the biggest problem at the moment, the treasury yield. So we'll see how that goes. We'll see how the quarter ends on Thursday night. And I do hope more and more of you will follow ECLUB Trading, and I hope we can make a difference together. And remember, here at ECLUB Trading, we grow together. Thank you so much for watching us. Thank you so much for being our subscribers, and I'll see you guys tomorrow.